Good afternoon. We have people starting to come in, so we're going to wait just a few minutes to get started with our Empowering First-Time Home Buyers with Housing Trust Silicon Valley. So we'll get started in just a few minutes. We'll just give it one more minute and we'll get started with our webinar. Before we do get started and I introduce our panelists today, or speakers today, I do want to thank our corporate sponsors for 2020. We have Citi, Bank of America, Old Republic Home Protection, Ventura, Hersey & Mueller, Wells Fargo Home Mortgage, Home Guard Incorporated, and MLS Listings. So I'm going to go ahead and introduce Adria Quinones with Housing Trust Silicon Valley, and she's going to talk today about empowering first-time home buyers in Silicon Valley and how you can have those informed conversations. So Adria, I'm going to kick it over to you.
Great. Thank you so much, Jody. Let me make sure I've got the right screen on as I'm sharing, and everybody can see that. Housing Trust logo, I hope so.
Yep,
well,
we've got it.
Got it? Okay, great. Well, good afternoon, everybody. This is Adria Quinones-Macer. I am with Housing Trust Silicon Valley, and I am the Director of Homebuyer Programs. And I just want to welcome everybody to this training. I'm sure you have a lot of questions. There's a lot of interest right now with first-time home buyers asking about purchasing a home. We are excited to be able to present here at SCORE. And I just wanted to also introduce my co-hosts today. I have Adeline Ramos, who is our Marketing and Outreach Coordinator. Adeline, you want to say hello?
Absolutely. I'm so happy to be here today, and thank you everyone for joining us.
Great, thank you, Adeline. And I also have Yvonne Castillo. Yvonne Castillo is our homebuyer education specialist at Housing Trust. She is our navigator for first-time homebuyers. She helps answer their questions and responds to the intake forms that they fill out and guides them through the steps to home ownership. That includes first-time homebuyer counseling, referring them to homebuyer education, or if somebody needs help with credit counseling, she gives them those resources. Yvonne, do you want to say hello?
Absolutely. Welcome everybody to the Empower Home Buying webinar today, and it's a pleasure to work with each and every one of you. Look forward to hearing more from you after the webinar. Thank you.
Awesome. Thank you, Yvonne. Well, let's go over some quick housekeeping notes. Adeline, you want to take it over for here?
Definitely. So as everyone may have noticed when they joined us, you are muted and your camera is turned off, but we are going to have question and answer sections throughout the presentation. And if you have a question, and it's related to the topic that we're discussing, please go ahead and type it into the Q&A area at the bottom of the Zoom panel. And at the end of the presentation, we'll allow you to raise your hand. We'll call on you and allow you to raise your hand. We'll unmute you. You may also have to unmute yourself. And then you can go ahead and share your questions. And we'll do our very best to answer as many questions as we can.
Thank you, Adeline, for going over our housekeeping notes. And just to give everybody a brief agenda of what we're going to talk about today, we're going to talk about not only the benefits of the Empower Homebuyer program, but also guiding homebuyers through the process and giving them, and understanding the different program information and guidelines that about the program, but also for yourself on how you can present that to your first-time home buyers if they have questions. We're also going to talk about how buyers agents work with our first-time home buyers who have been determined to be eligible. And for listing agents, if you're a listing agent, how accepting offers from the down payment assistance program participants, what you need to know, escrow timelines. Everybody's always interested in how quickly we can close. And we're going to talk about participating lenders and how you can expand your team. And then also how you can participate as a realtor with the Empower program. There's different ways you can do that. And we're going to provide you access to free program marketing materials that we actually have on our website. We are in the process right now of updating some of those materials because we just had some really good news recently where the income limits went up. So now there's more buying power for a number of first-time home buyers who previously thought they couldn't qualify because their income was already above the income limits for 2019. But we just got 2020, so we're excited about that. So let's just start with a brief introduction of who Housing Trust Silicon Valley is. Many of you probably know Housing Trust or have heard of us, I hope so, that Housing Trust is a nonprofit community lenders. We were formed back in the year 2000, and back then we started doing small down payment assistance loans, or actually they were closing cost assistance because they were only $6,500. And we have grown from that. We have grown now to, we've had programs where it was $50,000, $72,000, and now with the Empower program, we can go up to 17% of the purchase price with a maximum of $136,000 in down payment assistance. So it is a huge, huge jump, and we are excited to be participating and being able to offer this to first-time home buyers. Now, Housing Trust has assisted over 2,500 home buyers, and it's actually a lot larger than that, but I need to get my new numbers here. But we've helped a number of first-time home buyers, and these are all first-time home buyers that are within what we call the low to moderate income levels. These are income levels where families may find it a little bit more difficult to save for a down payment assistance, down payment and closing costs, and purchase a home here in Silicon Valley. So what we're trying to do with our down payment assistance program is extend that hand to help them get into their first home. Now, aside from that, we also do a lot of pre-purchase counseling with first-time home buyers and home buyer counseling. And the pre-purchase counseling is usually done, of course, when they're barely beginning on their journey to home ownership. A lot of first-time home buyers are finding it difficult to navigate what their first steps are. In fact, I believe a survey last year showed that close to 70 or 75% of the renters that they surveyed in California really didn't have the knowledge about how to start the process, didn't understand that there's down payment assistance available, or how much down payment they can actually they would need in order to get in, because a lot of first-time home buyers are under the impression that they need 20%. So we try to make sure that we provide information about the steps, resources if they need credit counseling or home buyer education. And then once they've already submitted their application and they're determined to be eligible for our program, that's when we provide home buyer counseling to them. And this is just guiding them along the process of the purchase by answering their questions as they're navigating through the closing process. And of course, we work with our wonderful people at the title companies, and then our lenders as well, and then the listing agents and the buying agents. So we try to make sure that we maintain communication with everybody. So today we are going to talk about the Empower Homebuyer program, which is a County of Santa Clara 2016 Measure A program, and we'll talk about how that came to be. We're also going to talk about the Homebuyer Empowerment Loan Program, which is funded by Housing Trust Silicon Valley. These are our own funds, but this program is different than the Empower program because this program helps first-time homebuyers who are above the income limits of the Empower program, but they still need help with some down payment assistance in order to help them get into their first home. So, so let's actually start. We have a quick poll question. I know this has been a topic. I've been seeing it several news articles. How many of you have been fielding questions or field questions from homebuyers about down payment assistance? If you guys can just give us a quick vote, we would like to see that. It's either yes or no. Do we have anybody participating?
Oh, yes. I don't know if you can see it, but people are
Oh,
definitely...
I can't.
Okay. Yes, people are definitely sharing their answers right now.
Yay! All right.
Yeah.
Awesome. Well, Adeline, do you want to just give it a few seconds and then we'll tell me when we're going to end that poll?
Absolutely, yes. Let's give it about 10 more seconds.
Get your votes in, people.
Yes, your vote is important.
That's right.
All right. Okay. I'll go
All
ahead
right.
and end the poll. And
Awesome.
I think I can share the results. Can you see them?
Oh, wow. Okay, yes, 48%,
right.
no, 52%. So it's kind of 50-50. Wow, that's still 48% is a lot, I think, these days. Thank you, Adeline, for sharing that. Yes, for those of you who have been fielding phone calls and interest about down payment assistance, this is actually a great time, especially with interest rates, being low, and a lot of first-time home buyers are really, considering getting into their home. So we're excited that you're here and you're here to hear the information about down payment assistance. So I just want to give you a really quick view of down payment assistance programs. Although we are going to talk just about the Empower here in Santa Clara County, it's good to know that there are down payment assistance programs available throughout the Bay Area, and they have different sources. They could be either through a program called Wish Funds. There's some banks now that are actually doing down payment assistance. They're small, but they're still very helpful, and some of them are actually down payment assistance grants, which we'll talk about briefly. But there are other down payment assistance programs that are popping up. Cal HFA has one as well, where they have, I think it's called their Zip Plus program. So there are different programs that are available. Now, these programs could be down payment assistance, but there are some assistance programs that actually help first-time homebuyers with closing costs as well. And when we're looking at forms of down payment assistance programs, they could be one of the two. They can either be a grant or they're going to be a second lien. So second lien is going to be that there's a repayment term, right? So there is a lien, an additional lien on the property, and there is a repayment term on that loan that requires the home owner now to repay that, that down payment assistance. But there's some other types of programs out there that actually are grants, and they are some really terrific ones where they will forgive at the time of close. Imagine that, being able to get a grant for down payment, and then once you close on the transaction, that grant is forgiven, and the homeowner no longer owes that money. And then there's other down payment assistance programs that are grants as well, but they're forgiven over time. If you hear about, there's one called the Wish Fund, that is forgiven over the course of 5 years. So it's forgiven 20% every single year. So if the buyer sells within, 3 years and they are less than 3 years, they're going to owe 60% of that. So, there's some really good programs out there that home buyers are really starting to find information about, because, this is the time where first-time home buyers are thinking about buying now that our selling season in spring has moved to the summer. So one of the important things that you have to remember is that these down payment assistance programs, whether they're liens or grants, have their own requirements, have their own income limits, and their own guidelines. So it's important that if your buyer is interested in that and you receive that information, you're working with a lender, that you understand that those different limitations and requirements. So on how do down payment assistance programs work, just to let you know, for most first-time home buyers, it helps them qualify, because not only does it help reduce the first mortgage payment, making the housing payment more affordable, but it reduces what we call their debt to income ratios. And what that shows is that it helps reduce what their monthly gross debt is going out versus the monthly gross income they're taking in. Of course, every single lender has their percentages where they will allow first-time home buyers to have a certain percentage of their income going towards their debt. So by having down payment assistance and being able to reduce that first mortgage, that will really help them make that housing payment affordable. And for some first-time home buyers who maybe have a little bit more than the minimum requirement for down payment of their own funds, it may actually help some first-time home buyers increase their purchase price. And so we've seen a few home buyers who have more than maybe 3 or 5%, and they were able to purchase a little bit of a higher purchase price. So down payment assistance programs also allow homeowners a time to repay. They don't have any prepayment penalty on them. And what we should also put on here is because it allows homeowners time to repay, and there's no prepayment penalty, there's also a lot of down payment assistance programs that are deferred. So meaning that there's no monthly principal or interest payment required on these loans. So first-time home buyers find it more manageable once they purchase a home and they get used to not only the mortgage payment, but of course we have taxes, insurance, and if they have an HOA, then they got an HOA fee to also work with. And it reduces the amount of funds that buyers have to bring in to close. We do have a minimum down payment requirement, but it can help first-time home buyers who maybe thought they had to put all 10% of their funds down. Now it can be lowered to whatever they borrow from the program and whatever minimum they can bring in according to the lender's guidelines. Now, before we go on and we start talking about the process to help first-time home buyers navigate and start the intake process with Housing Trust, one of the most important tools that we have is the homebuyer education class. We do require that first-time home buyers complete this 8-hour class because it does talk about not only the process of purchasing a home, but it also talks about the role of a realtor and a lender and some of the things that a first-time home buyer needs to have and prepare themselves for when they're going to purchase a home. And that can include the documentation that the lender's going to require, what they need to prepare in the form of savings for not only the down payment and closing costs or any other additional costs they need to take into consideration. Now, there are homebuyer education classes that are in person, but they're not doing them right now because of our shelter in place. So most of the classes now are online, and actually the certificate for Project Sentinel is now for their online class. So you would have the buyer participate, or they can enroll in Project Sentinel's class through the internet, through their website, and have their certificate after they've completed a counseling session. Now, one thing I do want to correct here on this slide is that the certificate is good for 2 years. So it's good for 2 years, not 1 year. First-time home buyers have enough time to hopefully go through the process, complete the process, get that certificate, and then get ready to purchase and know that their certificate is good for 2 years. Now, the Project Sentinel class, like I mentioned, is online. It is offered in English and Spanish, which is fantastic. Spanish is very much needed. And then it does require a counseling session with Project Sentinel staff just to make sure that the home buyer doesn't have any unanswered questions. Okay, now I promise after the next few slides, we will have a question and answer session for everybody, but let's talk about the pre-screening process and how do home buyers apply for the Empower program. So we do have a pretty good pre-screening and pre-qualification process. We ask first-time home buyers to complete an online intake form. And when we receive that online intake form, we really try our best to respond within 3 business days. And what we ask first-time home buyers is we ask where, you know, how many people are in their household, what city do they work in, how much funds do they anticipate that they can contribute for down payment assistance and closing costs. And so we want to make sure we get all this information, including did they attend a home buyer education class, because we just want to start setting them on the path. Right? We want to make sure that they have their certificate for the home buyer education class. Now, if they didn't attach it to the online intake form, we'll just respond to them and ask them that if they have completed the class to please forward us that certificate so that we can attach it to their online intake form. Now, of course, what first-time home buyers do once they have completed that and we've got the certificate, then we can review their intake, answer any questions they have, and then forward them the list of participating lenders where they can get pre-approved. And we do have a list of lenders that are active and participating in the down payment assistance programs. And so the home buyer will receive that email. We ask them to please interview, you know, at least 2 to 3, which is basically what they also teach in the home buyer education class. And then find a lender that they decide they want to work with and just let us know. So as they're getting their pre-approval from their lender, right, the lender's going to ask them for their documents. We also tell the first-time home buyers if they have any questions as they're working through that process. And we ask them to make sure that they keep copies of all their documents because some of those documents are the same documents that the Housing Trust is going to need for our down payment assistance program. And then we work with our lenders who are working with them to get pre-approved. If our lenders have questions regarding some eligibility requirements, they contact us, or if the buyer has questions as well. We want to make sure that everybody is all on the same page so that when the buyer gets pre-approved, we're ready to go for them to apply for down payment assistance. So after they gotten their lender pre-approval letter, because, you know, we want to make sure they can qualify for the loan with down payment assistance, that's when they're going to apply to the Housing Trust. And the buyer is going to submit the lender pre-approval letter to us showing that they were able to get pre-approved. And we set up a quick 30-minute pre-purchase review, just making sure that the buyer understands how to complete the eligibility application and go over the checklist of documents that we require from the buyer. Now, the buyers will then, once they've completed that pre-purchase review, then we set them up for what we call a file sharing account where they can submit their eligibility application and all their documents online. So we have gone remote, which we're really excited that we've been able to convert our process from face-to-face to a remote process, although we do miss the interaction of being able to meet the first-time home buyers. But, you know, we are still shelter in place, but, you know, we still can call and talk to them as well. So as the home buyers submit their eligibility application to us, buyers, once they submit that information, they're waiting to see if they're going to be program eligible. Now, one of the things we all, I want to make sure we note is that buyers should not be getting into contract at this time. Because if the lender's pre-approval letter is saying that it's based on them putting maybe a total of 20% down because they're putting their 3 and they're applying for the Empower program for 17, then, you know, if they're not pre-approved, if they're not eligible with our program, and we don't know that until we complete our process, if they get into contract, that is going to be an issue. So we won't finance if they've gotten into contract, because then it throws our processing, and then we have issues with loan contingency and other things like that. So, you know, as the buyer is waiting, you know, and then we work with our buyers really, really closely. They're really awesome in getting their any additional type of information or documents back to us as quickly as possible. We contact the lender, we get the credit report from the lender, we make sure that all the financing is straightforward and we have all our numbers correct. And then we'll determine the eligibility, usually 14 business days or sooner. We're actually, it's been up to 14 business days, just because trying to get people to respond to our verification of employment sometimes takes a little bit longer than usual. But for the most part, we are able to do it under 14 business days. And then we'll determine that they're eligible. And then this is when they get the pre-approval from the Housing Trust. And usually the pre-approval letter from the Housing Trust will match the lender's pre-approval expiration date. So most lenders' pre-approval letters will have an expiration date. We will match that date with a maximum of up to 90 days. And that's when the buyer can go out and look for a property and get into contract once they've selected that property. Okay, so I know we have some questions about the process. So before we start this poll, let's see if we can do some question. Oh, well, let's start the poll and then we'll do questions. How's that sound?
Sorry about that.
That's okay. Let's do this. Let's do this poll, and then we're going to do questions, because I think I've covered a lot of information and I should have put a slide in here to answer questions. So let's get our questions. Did you find this information about the intake and application process helpful? Should do that after the question and answer session. But let's go for it anyways, and let's see if anybody has questions and we can, you know, clear up some questions.
All right. Let me just quickly share the results of the poll.
Awesome.
This is great.
Great. So let's take some questions, ladies. Awesome. Okay. Any questions that we can respond to? Oh, I know now Adeline and Yvonne are kind of like in the back room there answering all these questions while I present. So I really appreciate it. We do have one question. Let's see. How much reserves does a buyer need? Ooh, that's a good question. So we are going to go into program eligibility and what we need, but I'll answer your question. It's 1 month. We only need 1 month's reserves from the buyer. All right, any questions regarding the intake process or the application process? Does it work for new construction? Yes, we have financed new construction projects, but it cannot be at pre-sale at a pre-sale time because we can't extend or reserve the funds after a certain period of time. And if construction completion isn't completed and buyers also have to maintain their eligibility throughout that time, it could, you know, if they're no longer eligible and they're in contract, then they're going to have to, you know, work that out with the builder. But so we can do new construction. We have, last year we did finance. One of our buyer went into a new construction or a development, and the unit was ready and they got into contract and we closed it. Let's see, I think you will share the PDFs so that we can share with our clients. So the flyers, if you're talking about the flyers are available on our website. This PowerPoint will be available, but you cannot copy or distribute this. This is copyright material, so you cannot, you know, send it out to people and share it and stuff like that. So there's certain copyright protections that we have on this. So we just want to be careful. You can, you know, provide the information to your first-time home buyers. They can also attend webinars that we have so they can learn about the programs as well. Can you send us a link to where people can apply? So where they can start the process. Okay, so our intake forms that I just went through is not an application. The intake form that the first-time home buyers first fill out is just a general interest form that tells us they're interested in determining if they could possibly be eligible for the program, but they have to complete a few, you know, 2 steps. One, they have to go to the home buyer education class, and that means all borrowers need to go on there, and their spouses. Spouses have to go. Spouses are required to attend the home buyer education class and present their own separate certificate. And then after that, then they have to get pre-approved through our lender, through one of the lenders who is working with the program. And then after that, then we work through the application and have them submit the application. So the first step is going to always be the intake form. Is this program dependent on loan type, conventional, FHA? We are conventional financing only. So it's not approved for FHA, although it has been submitted for FHA. So we're just waiting to hear back from FHA. And VA, it is not approved for VA at this time. So we're still waiting for that. How long of an escrow do we typically need? We'll talk about that in a second, but I'll give you a hint. It's only 30 days. All right, and then we're gonna, how long? So let's get into some of the program requirements, because I think we're getting into that right now. So let's go ahead and start that. So let's talk about the Empower program. Now I know you guys are gonna be shocked when you look at the income limits. Oh my gosh, they went up. Okay, family of 4. Now, 169,900 gross household income. For 2019, it was 157,500. So the income limits have really gone up. But before we start talking about the program eligibility requirements and how the program works, I just want you to know where the Empower program came from. And the Empower program came from a measure that was on the 2016 ballot here in Santa Clara County. It was called Measure A, and that was for a $950 million affordable housing bond for affordable and supportive housing. And that was passed by the voters. And of that $950 million, $50 million was going to be dedicated to home buyer or down payment assistance programs for first-time home buyers. So back in June 2018, the County of Santa Clara contracted with Housing Trust Silicon Valley to help them create this program. And in November 2018, I don't know if some of you remember, after Thanksgiving, we launched the program. And so since then, Housing Trust has been helping the county administer the program, helping through accepting applications, processing those applications, funding and closing the loan, and then we sell the loans to the county for their Measure A. So ultimately, the lien holder is not the housing trust, it's going to be the county of Santa Clara. And so first, homeowners will be dealing with the county when it comes to monitoring and homeowner compliance, because these loans do require the first-time home buyers or the homeowners are owner occupied. Okay, there's no renting allowed for the property at all. It's for affordable housing. It's used to help house families, and so it's not used as an investment or an income vehicle. It's to help families, find affordable and stable housing here in Santa Clara County. So as I said, I mentioned that the income limits have gone up. They just went up at the end of April 30th. And we received notification from the Housing and Community Development Department of the state of California. So we're really excited, household of 4, so mom and dad, 2 kids, maximum gross household income, $169,900. For a single person household, $118,950. So as I mentioned, these income limits have really gone up. So the down payment assistance maximum for the Empower program is 17% of the purchase price. And so, people, first-time home buyers, they don't have to borrow the full 17. They can borrow 10 if they want to. They can borrow 15 if they want to. But the maximum is 17% of the purchase price. And currently, the property requirements that we have on the program is the maximum purchase price is $800,000. It cannot go above $800,000. And the subject property must be located in Santa Clara County. So it has to be here in Santa Clara County, and it has a certain types of requirements as well. One, the subject property cannot be tenant occupied. So we can't lend on a property that has tenants in the property. So if a buyer gets into contract and we're reviewing the property information and it is tenant occupied, we will not be able to do the loan on that property. The financing for the types of homes are single family residence, condominiums, and townhomes can be financed. This program is not eligible for financing for BMR units, duplexes, manufactured or mobile houses. For one of the things that have come up with condo complexes recently is, will we lend on a condo complex in litigation? No, we won't. We will not lend if a condo complex is in litigation. The transactions have to be an arm's length transaction. And seller credit for non-recurring closing costs is totally eligible for us to accept. We are going to require an appraisal on all transactions. But one of the things that I do want to note is that we don't require inspection reports unless it's noted in the contract. So if you have on the contract that you require termite clearance, we're going to ask for a copy of the termite clearance, because the first lender is going to ask you as well. So aside from that, it's not FHA where we require a home inspection or anything like that. But if it is in the, like I said, in the contract, if it's noted, then we will ask for that documentation. And close of escrow dates, typically 30-day close of escrow, we are good with. I think the quickest we've done is 21 days. I would not recommend it in this shelter-in-place environment right now, because communication is a little bit more difficult with being able to speak to title and escrow on a daily basis, and with them being remote as well. So you just want to make sure 30-day escrow we are good with. We can absolutely close within 30 days. Now let's talk a little bit about, I had another thing on property and I can't think of what I was going to say, but let's talk about borrower and household eligibility requirements. So household first-time home buyers, they must have first-time home buyer status. So one of the things that we are getting a lot of questions on is spouses. One person may be signed or co-signed for a home to help a relative, but the other spouse didn't. That doesn't matter. They're still a household because it's husband and wife, and all adult household members must be first-time home buyers, meaning they have not owned a home or had an ownership interest in a home within the last 3 calendar years. Now, this does not apply to some mobile homes. Okay, mobile homes meaning here in Santa Clara County, where we find a lot of mobile homes that do not have a permanent foundation, and there's certain caveats to that. We've had first-time home buyers inquire if are they considered first-time home buyers? Yes, they actually are, but they are going to have to sell that mobile home. And that means that they're going to have to sell. I mean, we can process an eligibility application, but our letter is going to say that they still have to sell that mobile home. And that's going to be a requirement before we can give them full loan approval, meaning that if we have like a concurrent close, then we would be fine with that. But, where the mobile home is closing and they're closing on their home, of course, that's going to also, affect the first lender, because that's going to be our requirement. They cannot hold the mobile home after they've purchased their home. So we have also a minimum credit score of 680. So we're looking at a middle FICO score of 680. I know there's been a fluctuation in FICO scores lately with some lenders, but we are still at 680 minimum middle FICO score. Now, the program does require for first-time homebuyers to put at least 3% down payment of their own funds. So the buyer does have to come in with some funds in order to apply for our program and be eligible for our program. They cannot come in with 0%. Now, of that 3%, that minimum 3%, half of it can be from a gift. Right? So half of it can be a gift from an immediate relative, as long as they have their 1.5% and then their relative is giving them 1.5% or more, right? But still, the buyer has to come in with some funds. So when you look at this, even though the minimum 3% down payment from the borrower is 3%, the minimum down payment is 3%, the borrower can come in with 1.5% as long as the other 1.5% is a gift. For a total of 3%. And of course, these minimum down payment requirements have to meet what the lender needs. The lender may require the first-time home buyer to put more than 3% based on their purchase price. So just make sure that when you're talking to home buyers, if they're going for a higher purchase price, make sure you talk to the lender, because that buyer actually may need to put more than 3% down. And the other requirement, of course, is attendance of the home buyer education class. We need to have a certificate in order for us to accept an application. Okay, let's answer any questions regarding some of the Empower Homebuyer loan eligibility requirements. We are going to talk about the term of the loans and the equity share, just so that you have some information on how the repayment works. But anything about, let's see, Empower loan eligibility requirements. May I share income limits for, on Housebook, on Facebook? Well, you can, I've seen people take our flyers from the website and post it on Facebook. That's not a problem, because it shows the Empower program. It should show our information on there, our contact information. But I don't think those flyers are updated with the income limits yet. I think they're working on getting those updated. So you're going to be sharing the old income limits right now, but if you're okay with that, it's entirely up to you. Can an unmarried, non-domestic couple buy together? Yes, as long as they're living together. They have to be living together to be considered a household. If they are not living together and they're in separate households, they're not a household together. So they must be living together. And what is an arm's length transaction? An arm's length transaction means that the buyer does not know the seller, they're not related, they have not entered into a separate agreement outside of the purchase contract. So that's what kind of like an arm's length transaction is. Great. Any more eligibility requirements for our borrowers or our household members? Okay, let's go. Let's go to the next one. Let's see. All right, let's talk about the terms and how the Empower Homebuyer program works. So when we do our homebuyer workshops, we go through all of this with first-time homebuyers so that they understand how the equity share works. If you can master how to talk about equity share and appreciation and how this works, let me tell you, people are going to look at you as an expert. So let's talk about how what the terms of the loan are. So the Empower loan does require that, or it is a term of 30 years. So it's going to be a 30-year deferred loan. And by deferred loan, which I had mentioned, it means there's no monthly or principal interest that is required, that the home buyer is required or the homeowner is required to make. So there are no monthly principal or interest payments. Now, and there's no payments for the 30 years. They're not required to pay back the loan unless they sell the house or they're doing a cash out refinance, right? And they're going to set, if they're doing either one of that, no matter what, for the Empower Homebuyer program, they're going to pay back the principal and they're going to pay back a share of the appreciation. Okay, so instead of interest, this program does not have any type of interest. Instead of interest, it's called contingent interest, which is a share of the appreciation. So the borrower is going to pay back a share of the appreciation, which is a percentage, or the percentage share is going to be whatever the percentage that they borrowed for the Empower loan. So if they borrowed 10%, from the Empower program, then their share of appreciation is going to be 10. If they borrow 17%, then their share of appreciation is going to be 17. So, you know, you want to make sure, or we want to make sure that buyers understand that that's how their share of appreciation works. It's based on the percentage of the Empower loan that they borrowed. Now, one of the great things about the Empower program is that the County of Santa Clara does allow for homeowners to deduct certain contributions from that appreciation. And the types of contributions that they will allow for deduction are the qualifying capital improvements and acquisition closing costs, which are not otherwise known as non-recurring closing costs when the homeowner bought the property. So qualifying capital improvements are according to IRS guidelines, and this could be like, you know, some form of remodeling of the home, anything that falls into those IRS guidelines. The borrower, of course, you know, is going to have receipts and everything, has to be in good workmanship, and has to fit and be permitted if it needs permits. But, you know, they will be able to deduct that amount from the appreciation before the county calculates the share. So in addition to that, the homeowner being able to deduct any type of borrower contribution, the county also is capping how much of the share of appreciation they're going to get back from the homeowner. And it's capped for the first 10 years. So that when the county does their calculation and they have the number for the share of appreciation the homeowner must give to the county in addition to the principal, the share of appreciation itself cannot exceed the original Empower principal loan amount. And, you know, I know that is a mouthful, a lot of information, but let's see if we can break it down with this slide, which makes it a lot easier to explain. And this, let's just say that Yvonne, and I know I'm using very low numbers, everybody, but, you know, it makes it easier math for me when I explain it to people, and people can kind of see smaller numbers to understand. But let's say Yvonne purchased a house for $300,000. And when she purchased the home, she borrowed 10% from the Empower Homebuyer program. So she borrowed $30,000, right? So she borrowed 10%, so that's going to end up being her share of appreciation percentage. Now, Yvonne is selling her house in year 5, and she is selling it for $1 million. We had a red hot market, and I am buying that from her. So thank you, Yvonne, for taking my offer. But in that period of 5 years, Yvonne has appreciated $700,000, right? Because she bought the property for $300,000. She's selling it for $1 million, and now she is, she has an appreciation of $700,000. Now, during the 5 years, Yvonne had a small bathroom remodel, and it was around $5,150. And then she had also paid about $5,000 in non-recurring closing costs. So when the county does their equity share calculation, they're going to take the appreciation amount that she has, the $700,000. They're going to subtract her borrower's contribution, right, $10,150, so that they get a net appreciation amount, and that is $689,850. Now they'll take that $689,850, and they're going to multiply that to get the appreciation share. Now they're going to multiply it, you know, by 10%, right, because she is going to share 10% of that $689,850, which comes out to $68,985. But Yvonne is in a capped, she's within the capped period, right? She's in year 5. The capped equity period is for the first 10 years of the loan. So because she is in year 5, the county will not take more than what her original principal loan amount was, right? So she had, she borrowed $30,000, and instead of asking her for $68,985, they're going to only ask her for $30,000 of that share of appreciation. Again, it's capped for the first 10 years. So now instead of, so now Yvonne's going to pay back the $30,000 Empower loan and the $30,000 in the share of appreciation, for a total of $60,000. Quite a savings for first-time home buyers when they get into their house for the first 10 years. If they're looking to pay off the county, this is a great time to pay off the county because there is a capped period of time for the equity share. Now, this is just an example of what it looks like in the uncapped equity share period, right after the 10 years. So if Yvonne was selling it in year 15, same scenario, same purchase price, how much she borrowed, same thing. So this is the same thing, but let's say she was doing this in year 15 instead. Well, she's in the uncapped period. So if she's in the uncapped period, the county's still going to do the same calculation. You know, they're going to take the $700,000 in appreciation. They're going to subtract the $10,150 in borrower's contribution, and they're going to get their net appreciation number of $689,850, and they're going to ask her for 10% of that, right? So it's going to be the $68,985. So that means now with the $68,985, she's going to have to pay the full amount back to the county. So she's going to pay back the $30,000, which is the original principal amount of the Empower program, because no matter what, she has to pay back that loan. And then she is going to pay also $68,985 in the shared of appreciation, because this is during the uncapped period. So the easy rule of thumb for you to remember is year 1 through 10, there is a share, the share of equity is capped for the program. That's a good thing for homeowners to know. And then year 11 through 30 is the uncapped period. That's where the share of equity, is going to, whatever is the share of equity that is calculated, the homeowner is going to have to pay that in addition to, or repay that in addition to the loan. Awesome. Let's see. Any questions about the loan terms and equity share for Empower? Realtor can represent a relative as long as the relationship is disclosed, right? So, yeah, the relationship can be disclosed. Yes, they can represent a relative, but we're talking about the arm's length transaction between the seller and the buyer. So that's got to be an arm's length transaction. What if the home doesn't appreciate? If the home doesn't appreciate, then there's no appreciation due, right? No matter what, if there is some bit of appreciation, if there's 1,000 in appreciation, no matter what, they're going to share in that appreciation number. If there's no appreciation, then there's no appreciation due to the county, but the loan is still required to be repaid. The loan must be repaid. So here's quick website addresses for you to take a look at. This is the Housing Trust website, www.housingtrustsv.org. This is our Empower Homebuyer webpage where buyers can get information about the Empower Homebuyer loan program. And on there, we have the intake form link where they can fill out their intake. And here is our contact number for any questions about the Empower Homebuyer program, and our email address for Empower Homebuyer questions. So those are the best place where you can contact us for any information regarding this program. All right, any more questions before I move on to the HELP program? We're almost done. We are at slide 25 of 39. If the home depreciates upside down, is the loan satisfied if a short sale is done? I don't know if the loan is satisfied if a short sale is done. The county is going to work as a second lender and is going to require repayment of their loan. So that is going to be up to the county how they're going to handle short sales if that does start to become an event that is starting to happen here in the Bay Area. Okay, so let's talk quickly about the HELP program. The HELP program is the other down payment assistance program we were talking about, but this is for really to help first-time home buyers who make above the income limits for the Empower program, but they still require some assistance with down payment. And as you can see, for a family of 4, our income limit is $198,240. So we have seen, like I said, a huge increase in the income limits this past year. Currently, the HELP program, the maximum purchase price is $800,000. Are we thinking about raising it? We might not. We're still, we still have to review certain things in order to make any changes to that purchase price. The deferred loan, it's a deferred loan as well. So for the Empower program, we will only do a maximum down payment assistance of 10%. The loan is also deferred, meaning there are no required monthly principal or interest payments, which, by the way, really does help the lender, because the lender's not required to have a payment for the Empower loan or the HELP loan, because it is deferred for 30 years. So that really does help first-time home buyers in qualifying. It can only be used for down payment. The term of the loan is the same. It's 30 years. And then the geographic area is a little bit extended on this program. Not only is it for Santa Clara County, it also includes the cities of Menlo Park and East Palo Alto. If the properties are located in those cities, they can qualify for the HELP program. Now, the HELP program is different than the Empower program. Again, for this program, no payments until the expiration of term, sale, or if there's a cash out refinance. Principal and a share of equity is always due. So just like the Empower program, the homeowner is going to have to pay back the principal and any share of appreciation. And the share of appreciation amount or percentage is going to be based on how much they borrow. So if they borrow 10% on the HELP program, then their share of appreciation is going to be 10%. They're going to have share 10% of that share of appreciation. So this is actually a very straight calculation, meaning that there are no borrower's contribution. There is no cap period for the HELP program. It is a straight equity share that the borrowers are going to have to repay in addition to the principal loan amount. So if they have an appreciation amount of $100,000 and they borrowed 10%, then they're going to share in 10% of that $100,000, which is going to equal $10,000. That will be the share of appreciation, in addition to the loan amount that they borrowed. So there are no deductions. There are no cap periods with the HELP program. So the differences are outlined here in this table. The Empower program, yes, with the Empower program, the home buyer can borrow more, 17% of the purchase price, versus HELP, which is 10% of the purchase price. But the Empower program does have lower income limits, although they have all gone up so high. But it does have a cap on the income limit where of 120% of the area median income, where the HELP program will go up to 140% of the area median income. So higher income levels with the HELP program. The interest type for both programs is equity share. The Empower program, deduction of borrower contribution allowed, yes for the Empower, no for the HELP. Cap period for equity share, yes for Empower, no for HELP. So those are just kind of like the program differences so that you are aware of. Again, this is our web page. This is our general home buyer information email. If you have any more questions about the HELP program, you can also contact Yvonne Castillo. She's our home buyer education specialist. That is her extension. And if you have any questions on home buyer empowerment loan program, I just want to make sure we touch on any questions, and then we're going to talk about other assistance programs really quickly that I know are available. And we're going to talk about how you or what a buyer's agent needs to be aware of and a listing agent. Question: what would the share of appreciation amount be if the deferred loan is paid off prior to selling the home or cash out refinancing? The share of appreciation is paid off when the loan is paid off. Okay, so when the loan is paid, that's when the share of appreciation is paid. So the buyer can't just pay off the Empower loan program. If they're going to pay it off, they're going to pay the share of appreciation at the time they're paying off the loan. All right. Any other questions? All right, let's see if we can go through this really quickly. So just to let you know, you've heard me say WISH program several times. There are programs, a WISH program out there that some lenders have that are available to some lenders, or they're participating in this program, where a home buyer can get up to $15,000 in down payment assistance. It is forgiven in 5 years, and the program has its own income limit. That would be a question that you would ask the lender who has access to these funds. America's Home Grant, that is, I believe, through Bank of America. They do have up to $7,500 for closing cost assistance. It has its own income limits. The property has to be located in, I believe it's a low to moderate income level census tract, and it is forgiven at close. Now, I know Bank of America is rolling out, I think, a new a down payment assistance program as well that is forgiven at close, that we're able to work with them with the Empower program. So a lot more assistance for first-time home buyers out there. Now for buyer's agents, let's move on. As a buyer's agent, if you are representing buyers who tell you that they're working with the housing trust and that they've applied, make sure that they have a program eligibility letter to show you. Again, sometimes first-time homebuyers get a little confused and they think the intake form is their application. It's not. If they do not have a letter from us saying that they're eligible, that means we probably don't have an application from them yet. So you want to make sure that they contact us or tell them that they need to have a letter from the housing trust showing that they're eligible. That's also going to give you a big hint if they've been pre-approved by the lender or not, or maybe they did get pre-approved by the lender, but they haven't actually gone through the process of submitting their eligibility application for down payment assistance. Again, make sure you review that lender pre-approval letter. You should have a pre-approval program eligibility letter from the housing trust. That's when you know the buyer is ready, and make sure you look at that expiration date as well. We also give tips to purchasing property with down payment assistance. That is a handout that we have available to first-time home buyers once they're determined to be eligible for the program. And as the buyer's agent, notify us when they get into contract. We really want to make sure that we get our process started. We have to contact escrow. We need to get fees from everybody. And then we'll contact the lender to make sure that the lender is sending us the information and documents that we require in order to start processing the loan approval. We will, regarding loan contingencies, that is going to be on the first lender. We don't answer or advise people to release loan contingencies. That's going to be a conversation that you have to have with the senior lender. And like I said, we work with the lender by having the lender deliver the loan application package to us so that we can have the first-time home buyers ready to go. Listing agents. Okay, if you have a listing and you have a buyer who is eligible or has an eligibility letter from the housing trust, make sure that you get that information from them, that you have a letter from them that has an expiration date and that the letter has not expired. Our letters will, expiration date will match the expiration date on the senior lender's letter, or a maximum of 90 days. And if you have any questions, you can talk to the lender who's participating in the program and ask them about the pre-approval with the housing trust, or you can also contact us. We're more than happy to let you know what our process is. If you have any information about closing date, when can you close, what the close of escrow date is, 30 days, great. We're going to tell you, yes, 30 days is a very common close of escrow date for our transactions. And discussion about removing loan or appraisal contingencies, again, that's going to be with the senior lender. We let the senior lender decide that. So it's that's question that will be addressed to them. All right. Any questions about what you do as a agent? Where can we find a list of participating lenders? Yes, we don't give out that list. We have a few lenders that are participating. I will show you some of the lenders in just a second, but just know that, we try to pre-screen the buyers to make sure if they're interested in our down payment assistance program that they have completed the home buyer education class, that they do have the funds for down payment and closing costs. Otherwise, what will happen is if we have these lenders out with their information, they get bombarded with a lot of people. And then when we really have a bona fide first-time home buyer who needs to get pre-approved, then it becomes a process of, trying to get that communication established sometimes. So we don't give out our participating lender list. Participating lenders, I'll tell you, we do have a couple of major banks that are working on this program. Bank of America, Bank of the West, Boston Private, Guild Mortgage. But when it comes to lenders too, it's about the loan officers and whether or not the loan officers understand how the program works, and if they've gone through some of our classes so that they understand the process. I think it's very important that they do that. Again, you got to remember, first-time home buyers, they cannot get into contract unless they have our letter. If they get into contract first and then they want to apply, we're not going to accept the application. So a lot of our approved lenders and participating lenders know that, and that's why they come to attend our classes. And we'll work with any lender. The lender, though, still has to make sure, one of the biggest requirement is that they, easy and simple, read our guidelines, approve our guidelines, approve our loan documents, sign a lender participation agreement with us, and sign our lender's instructions, that they understand what the process is and what they need to do, and that the program is compatible with their loan programs. So we want to make sure that there is no hiccup when the buyer is in contract. So we do have a preferred loan officer list. Preferred loan officers get on our list through invitation only and with additional training and exam. Usually preferred loan officers also have, successfully submitted some pre-approvals and have successfully closed some transactions. So we really want to make sure that we have seasoned veterans working on this program. And like I mentioned, here's just a few of the lenders that are participating in the Empower and the Help program. You can talk to, if you have a favorite lender, you want to work with, have your team, he's part of your team or she's part of your team, have them contact me at the Housing Trust. I'd be more than happy to get them going and get them started. Direct them to the lender's instructions and participation agreements so that we can increase the number of lenders on our list. Now, how can you participate as a realtor? So, before the shelter in place, oh my gosh, we were having so much fun. We were having workshops and home buyer fairs all over the county. And what we were doing is we were working with local real estate nonprofit organizations like ARIA, WCR, FARIPA, and NORA. And we had tables at these workshops, and we would start the walk-in registration early so people had a chance to meet with the realtors and the lenders in a very relaxed atmosphere. We would then do the presentation about the Empower program, and then give enough time for the first-time buyers to go back to talk to the realtors and lenders. But now that we have the shelter in place, we've got to come up with a new format. So we are going to be working still with our real estate organizations and trying to see how we can work so that we can still have some participation from not only their organization, but their realtor members as well, so that everybody can benefit. So it's important to us to have that voice of a real estate professional, because we don't sell real estate. We are not realtors, we are lenders. So we want to make sure that first-time home buyers have access to professionals. Another way is building a relationship with the participating lender. So we've had our participating lenders. We are going to probably do a lender panel soon where we can work with realtors and have them ask questions to the participating lender. You can also encourage your favorite lender to become a participating lender. That's the biggest thing. And then you can also distribute, some of our handouts at open house. Well, we can't, open houses are still shelter in place. So you're going to email this to your first-time home buyers, right? You can give them information, access to information. A lot of our marketing materials, like I said, are on our website, and we do have program flyers that are available in different languages. But please know that you cannot alter these flyers. You cannot alter them in any way. Because these are, copyright material. These do have our logos. You can't use our logos without our permission, but you can use our flyers. Our flyer has all our information on there. you can forward those to first-time homebuyers. You can also forward the steps to home ownership. Again, you can't alter the information or alter our forms, but you can pass off that information to everybody. And the other thing is that what you can do is join the Realtor contact list on our website, which is under our lender and realtor resources. And here's the webpage address, so that you are up to date with any type of program information, upcoming workshops that are made available to you, and that way you stay in the know of what's going on, especially if we do have any changes with purchase prices or income limits or how much down payment is allowed. So other ways that you can participate is you can encourage buyers to review the website and complete the intake form. On the intake form, there's actually a field where the buyer can put your name as their realtor. But we will ask you, please do not fill out the intake form for them. They have to fill this out themselves, because we want to make sure that their information is on there and that their email is on there, because when we respond to first-time homebuyers, it's going to be responding directly to them, and we want to make sure that we are working with them directly, but they can add your name on there. That is totally, there's totally a place where they can do that. And that helps us as well, so that way, once they get in the process of being pre-approved, we always notify our lenders once they've submitted an application, and then that way we tell the lender as well that, who the realtor is that they're working with. You can provide information about the 8-hour homebuyer education class, which is the information I gave you about Project Sentinel. You can always forward that information to first-time homebuyers. And you can also invite the Housing Trust to present to your colleagues, right, in your office. For maybe some of you are having these real estate office meetings. We can do that as well, or any local realtor marketing meetings. So I know from time to time, each area has weekly meetings. We're more than happy to present. All right, everybody, last slide. Shelter in place, Housing Trust is on the go. Whew, we made it. So shelter in place is still in effect. We still are, our organization is still working on how, depending on the different stages, how we're going to come back, how we're going to continue working remotely, if that is, part of the plan of having us come back to the office. But we're actually doing great working remotely. We're communicating with our first-time home buyers and our lenders and realtors via email or through the phone. With the buyers, we actually do some technical training on how they can upload their documents to the file sharing secured website once they're applying for the down payment assistance. And we have been getting a lot of first-time home buyers that are starting to do that. We have a number of them that have been referred this week to lenders for pre-approval. I think it's just kind of the sign that we're seeing. We're also using DocuSign for signature that's acceptable for most documents. And like I said, we're just continuing to work with our partners here at SCORE, realtors, lenders, and title companies, so that we can continue to help first-time home buyers as they navigate their steps to home ownership. All right, any questions? And how am I doing on time, Adeline?
You're doing great on time, Adria.
Awesome. Any questions? No questions? Oh, come on. Anybody?
There was one that was in the chat box, and I had to jump off for just a moment. Did you guys see that one about DACA documentation?
Yes, so the down payment assistance programs do require that first-time home buyers are U.S. citizens or permanent resident alien. Unfortunately, DACA recipients do not qualify under that requirement. Well, I tell you, thank you, everybody. I am looking forward to seeing how we can not only work with SCORE in creating more webinars, working with the public so that the real estate community gets that great, interaction with them, working with our other nonprofit real estate organizations in the future so that we can still create these opportunities of not only partnership with the Housing Trust, but, helping you develop partnership with first-time home buyers out there in Santa Clara County that are looking to purchase a home. Any other questions before we wrap this up? Do you have anything else to share, Jody?
I don't, other than also, on the subject of first-time home buyers, sometimes affordability is key. And I'm currently working with Adria to put together an affordable housing webinar next Friday. So be on the lookout for that. And we'll have some lenders and, of course, Adria talking about how those things go hand in hand with first-time home buyers and affordable.
Awesome. Well, just to wrap this up and for everybody to know, we don't have a preferred realtor list. We don't have that list. We encourage first-time home buyers to work with any realtor here in Santa Clara County. I think a lot of it is also learning or partnering with your lenders, participating lenders who are actively working with the down payment assistance program. I think that's something that is helpful. But for now, we don't have a preferred or a realtor list that we send out to anybody.
So it's great you guys are taking this class, because now when you're talking to people, you can let them know you're already educated about helping them through the process.
Absolutely. And if anybody else has any questions, again, please feel free to email us. We're more than happy to provide that information. Again, on our webpage, on the Empower page itself, the flyers are available. And there's other documents that are available that you can share with your first-time home buyers. The information about the homebuyer education is free, right? You can tell them this is a great place where they can get their homebuyer education completed. They can get that certificate. I believe that certificate may also work for some of the lender requirements, because they ask for homebuyer counseling certificate for first-time home buyers. So that's something they can really get out of the way, because it's the sooner they get it done, then they can really sit back and navigate and get their forms and their application completed. All right. Well, no more questions. I think everybody's done. They're probably zoomed out. All right, everybody. Well, I think we're just going to go ahead and wrap this up. We'll let you all go. Stay healthy, stay safe, and have a great Memorial Day weekend.
Absolutely.
Bye.
Thank you, everyone.